New investors are continuously bombarded by claims from various types of market experts about the superiority of their own approach to investing. With so many different investing styles out there, it can be overwhelming for new investors to navigate and make informed decisions. In this video, we will discuss the most common investing styles and how you can use each style intelligently to craft a winning investment strategy. We will start with the two polar opposite investing styles, technical analysis and fundamental investing. Technical analysis is an investing style where traders buy and sell securities within a short span of time with the goal of profiting from short-term price fluctuations. Technical analysis can be very exciting and lucrative, but it requires a lot of time, effort, and expertise. It is also a very high-risk investing style. Fundamental investing is an investing style where investors look for undervalued securities that are trading below their intrinsic value. Fundamental investors believe that the market is inefficient and that there are opportunities to buy quality companies at a discount. This style can also be very profitable in the long term, but it requires a lot of research and analysis. We are covering both these styles and many others through this case study of a traveler who explores many investing styles so that he can come up with a winning strategy for investing. Once upon a time, there was a traveler who had a passion for exploring the world. This traveler was fascinated by the diversity of cultures, languages, and beliefs that existed across the globe. But more than anything else, what intrigued the traveler was the way people in different lands thought about and managed their money. One day, the traveler set out on a journey to visit various lands, each of which had a unique financial discipline. The first land the traveler visited was inhabited by fundamental investors. These people were always looking for good value stocks that they believed were undervalued in the market. The traveler noticed that the inhabitants of this land were quite patient and methodical. They would carefully analyze financial reports, earnings estimates, and other data to determine whether a stock was worth investing in. However, the downside was that they were often slow to react to market changes and would miss out on many opportunities. The traveler presented these investors with the stock he was studying, Dr. Lal Pathlabs, which was a diagnostic company based in India. The opinion he got from them was that Dr. Lal Pathlabs was a high-quality stock, which they judged from the high return on equity on the stock and the moat it had. As the most efficient lab in the country with the widest range of tests, they also felt that the valuation of the stock had become reasonable after the recent fall and gave it a thumbs up. They informed him that they valued such stocks by a different metric other than the price-to-earning ratio, which looked optically high. As the traveler continued on his journey, he came across another land where the inhabitants were technical investors. These people relied heavily on charts and graphs to predict the direction of the market. They were always looking for trends and patterns that they believed could indicate a good time to buy or sell a stock. The traveler noticed that the inhabitants of this land were quite competitive, always trying to outsmart each other by coming up with more complex models and algorithms. However, the downside was that they could become too focused on technical indicators and ignore important fundamental factors. The traveler asked these people their opinion on Dr. Lal Pathlabs, his favorite stock. To his surprise, they did not speak of any of the things the fundamental investors did, but had equally enlightening things to say. They told him that the first thing that they saw was a price trend, and in the case of Dr. Lal Pathlabs, the stock had recently struck a bottom but was still below its 200-day moving average. They next looked at the trend for the last few months, which was neutral, as the stock had gained 8% in the last 1 month, but lost 4% in the past 3 months. They finally went into the RSI, which is a momentum oscillator that measures the speed and change of price movements. They said that the RSI of Dr. Lal Pathlabs was above 50 but below 70, which indicated it was early in its bullish range. They suggested that the stock could be bought, but for different reasons. The traveler concluded that he needed to follow the fundamental investors to figure out which stock to buy, but use technical analysis to judge when to buy the stock. He also realized that using technical analysis to sell stocks may make him miss many multi-baggers. The traveler next arrived in a land where the inhabitants followed a top-down investing approach. These people believed that macroeconomic factors such as interest rates and government policies were the most important driver of stock prices. They would spend hours poring over economic data and news articles to try to anticipate market trends. The traveler noticed that the inhabitants of this land were quite informed about global events and could make accurate predictions about the direction of the market. However, the downside was that they would become overly reliant on their macroeconomic models and miss out on important company-specific information. The traveler asked these people their opinion on his favorite stock, which you all know by now. They answered him thus: with the interest rates world over being raised and fears of job losses in major economies, as well as with all the leading indicators pointing towards a slowdown, healthcare and utilities were among the best areas to be in. They thus viewed Dr. Lal Pathlabs favorably, but also advised him to buy some bonds as he expected interest rates to trend downwards soon. Traveler concluded that he needed to use a top-down investing approach with caution. He need not stop searching value like the fundamental investors, but he could use top-down analysis to overweigh certain type of value based on the type of economic circumstance. So in inflationary times, the traveler felt that he could overweigh deep value stocks. Similarly, in deflationary times, he could buy more of growth stocks. In times of low growth, he could overweight defensive stocks like healthcare and FMCG. And in times of high growth, he could buy more of technology stocks. After visiting these 3 lands, the traveler Sam met another traveler, Jane, who had been on a journey of her own, where the inhabitants followed a different set of financial discipline. We will continue our story in a subsequent video using our favorite stock, Dr. Lal Pathlabs, as an example.